All right, guys, Apple. $2 trillion company. Over almost 2.5 times the size of Facebook in terms of market cap. Revenue, almost $300 billion. PE, 32. X. Profit margin, 22. Check mark. So with a lot of hardware businesses, they have some software, but they got a lot of hardware. The margins are lower. It's not like software where the gross margin is really, I mean, even if you look at their gross margin here, it's 39%. And that's a mixture of hardware and software. So there is, but still, it's a very good profit margin. I'm cool with it. We have a very adorable dividend, 0.67%, pays out $13.7 billion last year. Last year's free cash flow was $80 billion last year. And the average in the last 5 years was $66 billion. Look at this return on assets and return on invested capital. Guys, this is why Warren Buffett's Berkshire Hathaway loves Apple. They reinvest their capital and make so much money off of it. This is likely to be the combination of return on assets and return on invested capital is likely to be one or both of our next pillars when we eliminate the first two, but they're very, very high. That's why the Berkshire Hathaway group loves it, because they're buying for the long term and they want companies that can reinvest their capital at really high rates of return, okay? So one thing to keep in mind, 5 years ago, somebody I knew who was Apple's biggest golden child, loved Apple, Apple's fanboy, said, Paul, what do you think of Apple from a fundamental standpoint? I go, it's absolutely incredible if you believe the revenue growth is sustainable, which I said I didn't know if I did. Let's see how right I was. 5 years ago, their revenue was $235 billion. Today it's $295. So it didn't grow like it did the previous 5 years, as we see. Went from 128 to 235, but it still grew enough to get a check mark. Again, Apple's so big, it's going to be very, very difficult to sustain high rates of growth. What's so funny, Mo?
Somebody wrote in here, where's the other guy that looks like a goat? I don't know why he looks like a goat, but that was a really funny comment. Sorry, Paul.
That's okay. Net income, 54 billion, 65, 45 billion, 64 billion. Check mark there. Okay. Number of shares outstanding. Look what they're doing here, guys. 21.2 to 16.95. Check mark there. So not only are they getting high returns on their capital, they're decreasing the share count. So as time goes on, they're taking their extra cash, which is very hard to reinvest, and buying back shares to make you a bigger owner of the company as time goes on. Because when they take shares away, you still own your one share, but now you own one share of less and less shares every year. So you're getting a bigger percentage of the company every single time they do that. Okay? So on companies that you might argue are reasonably valued or low undervalued, this is a good thing. Apple's got a little bit high valuation, but their return on invested capital is very, very high, which means they're going to be able to drive a lot more free cash flow as the years go on. So far we have all checks but PE, correct?
Yep.
Balance sheet, current assets, $154 billion versus current liabilities of 132. Check mark there. Cash flow, again, guys.
This is going to be incredible.
Let's look at their free cash flow.
Do you remember at one point they had more cash than the federal government?
Yes. We have free cash flow. We have this date. Go to the Apple free cash flow statement. Tell them the dates are wrong. Why is it? Maybe they changed their fiscal year. I don't know, but we'll have to figure it out. But it's showing here 70 billion versus 80 billion. Check mark there. I don't think that's accurate, but it still is a check mark, I guarantee. So still a check mark there. Their average is 66 billion. 66 times 20 is 1.32 trillion. That's an X because they're currently at $2.06 trillion. So they're currently need to drop by about 35 or 40%, 35% to be reasonably worth it from that perspective. However, guys, that multiple is based on what you think is going to happen. When you have a high return on invested capital, that means the more they invest back in the company, the bigger they're going to make their jumps in income. With a high return on invested capital, they can get a lot more profit as time goes on their free cash flow. So keep that in mind. You might be willing to pay a higher multiple for Apple than the 20 times over the last 5 years. You might be willing to pay because that's pretty real. I mean, you know what I mean? It's like, okay, they're selling for 25 times free cash flow of last year, but they're really able to drive a lot of profit. So if you think they have a lot more growth potential, even 30, 40% over the next 4 or 5 years total, it might be worth it. I don't know exactly. Do you want to look at the charts?
Yeah, sure. This is something that the Bid and Ask Nation has been going crazy for. And the reason is, this is a dog stock. So what dog stocks are stocks that go through the sweet spot, down, obviously, and then they just coast on the bottom and go sideways for a very long time. While they're going sideways, the price just keeps dropping on us, and you're seeing that in Apple. Now, this is a good opportunity because once this red line on our stochastic just starts moving up over time and crosses over this 32% area, we'll be the first ones in there to grab it. So this is, I have told everybody we've had a tracker share on it for 2 weeks. And this could last months, I don't know. That's the point of a tracker share. Throw up $120 and you have potential to make a lot more money once this thing crosses through because you will grab it right around 32% and ride it the whole way up. And I'm willing to bet that when you get up to this overbought area, Apple goes sideways for a long time. And as the stochastic goes sideways, the stock price climbs like that, just like it's doing to the downside right now. So Apple is going to eventually be something good for you if you are very patient with it. You have to be patient with it.
Thanks so much for watching the video. We hope you were intrigued. If this style of investing speaks to you, click the link below to join our Patreon. As a patron, you get access to a wonderful community of like-minded investors where you can chat, connect, ask questions, and share ideas with badasses like you all over the world. The best part is you get the amazing Everything Money software. This is revolutionary, unlike any YouTube page. You can track your investments, look at stocks, and quickly run our 8-pillar analysis on any company you like. The top tier patrons get direct access to Paul and Trader Mo. You'll see their daily trades, their updated portfolios, and every options contract they write on a daily basis. We provide Patreon exclusive videos just for you, including live streams and exclusive content from our team. Our bottom patron tiers fill fast, so join today. But hey, if you don't believe me, look at all of our patrons' amazing success stories. In comparison to other financial platforms, our software is by far the best value. This is your chance to get serious about investing. If you're finally ready to level up your investing game, join our Patreon and let's start kicking ass together.